The E-mini Russell 2000 index has been in a bear flag for a few months, and that appears to be weakening. I'll show it to you in just a minute. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a bear flag on the E-mini Russell 2000 Index Futures. We'll have a look at that shortly, but first we've got a few active trades to look at. Later on today's Trading Maxim. Happy Monday. Let's wrap up June with an awesome week. Remember to click the subscribe button and hit that bell so you don't miss any of these great trade setups. Let's take a look at the active trades. Well, there you go. Tesla's still going sideways right here. We got a little bit of profit from this, and hopefully we'll get more. Parabolic SAR is catching up here. It's right at the break even, so shortly we'll be able to start trailing the stops on this. The Australian dollar, US dollar is compressing right here, making kind of a descending triangle, so that's promising. Volume and volatility are dropping off. So we should get some movement on it soon. Still waiting for it to hit the target right here at 67.48. Well, Litecoin didn't waste any time hitting the target right here on Saturday. Remember, the cryptos don't close over the weekend. Half of my position is closed for profit. Stop loss has moved to break even right here on the second half. Now we'll wait for this parabolic SAR to drop down here below the break even so we can start trailing stops on this one. And the last one to look at today, the S&P 500 setup from a week ago Friday gave us this full-size sell trigger right here this past Friday. So I am short from 3007. Stop loss is 31.31 and a quarter, and first target is 29.24 and a quarter. Now we wait on this one. And that's it for the active trades. Let's take a look at today's pick. The Russell 2000 Index is a small cap stock market index of the smallest 2,000 stocks in the Russell 3000 Index. It was started by Frank Russell Company in 1984, and it's maintained by FTSE Russell, a subsidiary of the London Stock Exchange Group. The Russell 2000 has been in a bear flag since late March. Looks like it's weakening a bit the last few weeks. Came down here and touched the bottom of the flag, pushed up, did not make it, just barely made it past half toward the top, and now it's attacking the bottom once again. So I believe we can see this weakening and giving us a sell trigger this week. Just to be sure we're all on the same page, a bear flag consists of an incoming downtrend like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to sell a daily candle close below the bear flag. On the breaking candle, we want to see this volume bar reach up to the volume average right here to take a full-size position. If it doesn't reach the average but does reach at least 75% of the average volume, I will open a half-size position to reduce risk. You can calculate the percentage by taking the volume here and dividing it by the volume average. You should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. The stop loss will be 1.5 times the ATR. First target will be 1 times the ATR. So on the day this thing breaks, just before the close, you will take a sell right here. You'll look down here at the ATR, multiply that by 1.5, measure that distance above the entry, and that'll be your stop loss. Measure 1 ATR below the entry, and that'll be your first target. If after entering the trade we get a candle that closes back inside the bear flag, We'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the flag should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on the E-mini Russell 2000 Index. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going to go back into the archive a little bit for our maxim of the day. Tim's trading maxim number 47. Leave your ego at the door. The market doesn't care. If I say it once, I've said it 1,000,000 times. The market is always right. The market doesn't care what you or I think. It does what it does without regard for any of us. So, to be a successful trader, you have to be willing to be wrong. You can't have any pride in your ability to pick winners. If you haven't been humbled by the market, you will be. Be prepared for it. Part of your job as a trader is to pick high probability setups and shut them down when you realize they stop working. Grow a thick skin. Suck it up, Buttercup. Sorry, not sorry for the tough talk on Monday, but you need to hear it. I want you guys to be successful, so I'm always going to shoot straight with you. And remember our Russell 2000 Index trade plan for today. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. And also remember to sign up for my free Trading Picks email list so you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments, or in a training video, or both. And remember, the only stupid question is the unasked one. And don't miss the next installment of the Trading Education Series this Wednesday when I'll talk about demo or paper trading. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week, and I'll see you Wednesday.